Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
Because you want 3 tax hacks for real estate. Yep, I have 3 tax hacks for real estate investors. We're going to go over them quickly. If you have any questions, go ahead and email us. We're going to go boom, boom, boom. These are going to add value to you. You're going to lower taxes, all legally, morally, and ethically. Kenneth French of VastSolutionsGroup.com. We've been in business since 1969. I took over in 2006, and now we're rocking and rolling. We just combined with, asset defense team, Bob Bloom. So now we've merged and now have a company called VastAssetDefense.com. Here we go. Let's get right to it. I'm going to show you my screen, and we're going to go over 3 ways to lower your tax liability, especially if you're a real estate investor, because this is mainly for real estate investors. Those are mainly people who are listening to us, watching us, and probably doing the same here today. 3 tax hacks for real estate people. Number 1, by the way, what's our goal here? Our goal here is to save legally, by the way, $2,000 just the people listening. Usually the people who are listening here are very well heeled. They've been around for a long time. They own their own business. They're usually commercial property investors. So, if I set that as a goal, if I can save $2,000 for you, I'm going to assume you're going to be a pretty happy camper. Okay. So by the way, who are we? VastSolutionsGroup.com, mentioned since 69. We've been open. Now we're at VastSolutionsGroup.com versus Vast Solutions Group. We started the company under the guy named Gary Coons, who passed away not too long ago, by the way, sadly. Started it as Coons Financial. He started it with really the premise of helping the end user client, helping the customer, as he would call it, help the customer. Everything else comes secondary. Now we do tax finance, artificial intelligence with the merger with Bob. We're now also doing asset protection and estate planning. I'm Kenneth French. I basically run the place. So let's get right to it. Number 1, defined benefit plan may lower your prior year's tax return, especially if you have no employees. Defined benefit plans. A lot of people forget about them, but it's a hack. It really is a hack because you could put away, I have an attorney I talk about every once in a while. $200,000 a year. He's in California. He's saving $80,000 in taxes. $80,000. You know what? And he does something unique, by the way. He puts $80,000 into a life insurance policy that he's going to be pulling money out, leveraging. He's going to buy commercial real estate. That's going to end up giving him enough income that he can retire on going forward. He doesn't even need the money in the defined benefit plan or his business, but the income that's going to be basically being helped by the government because he's just taking the tax savings on an annual basis, putting in the policy and pulling it out, doing the infinity investing. Everyone's doing that nowadays. By the way, in a defined benefit plan, you can invest in real estate. Yes, you can invest in real estate. A lot of people don't realize that. There's a bunch of rules, but it's better than, if you don't have any money and you need money into, and you want to get a tax saving and you want to put money in real estate, defined benefit plan makes a lot of sense. Number 2, R&D tax credits. Oh my gosh, especially nowadays, everyone's doing artificial intelligence. By the way, we started that in 2018, so it's kind of a done deal for us. We've been doing it for so many years, just second fiddle to us. But the nice thing is now people are starting to do artificial intelligence. They're learning artificial intelligence. So the nice thing there is they can get R&D tax credits. Now, R&D tax credits are not deductible. It's not a deduction. It's a tax credit. What's a deduction, by the way? Let's start with that premise. Let's say you spend $1 on something that's deductible, and your tax bracket, tax rate, let's just say it's 25%. There's 25 cents that you don't have to give to Uncle Sam. Instead, you put in your pocket. Does that make sense? You're spending it on a deductible expense, whatever it is, for $1, 25 cents, put in your pocket. That's nice, right? Deduction, right? And by the way, there's a lot of parameters to go with that, benefits, etc. But R&D credits, you spend $1 on something that's a justifiable R&D credit, $1, what happens? Boom, you get $1. Does that make sense? It's a credit. It's a credit. It's an R&D credit. Now, there's so many benefits to taking the R&D tax credits. It's crazy. And a lot of people are just walking over a dollar. Let's say there's $1 there, they're walking over it. Why not spend time? As long as it's efficient for you to get that dollar, get that dollar. Here you see, may lower your tax bill. By the way, it's free, tax free. So it's important to think about that. Now, all you have to do is ask your tax advisor. In some cases, it makes sense. Yeah, it doesn't make sense, right? But at least ask your advisor. It's free to do it. Ask your advisor. Will they take the time to do it? Sometimes it costs more money, by the way, because there sometimes has to be a study. But man, I'll pay a CPA or whatever the number is, $2,000 to get me $100,000, right? Especially in today's world where everyone's spending a lot of money on artificial intelligence, even as small business owners. And we're telling people to spend a ton of money. I would even say an hour a day. We say do an hour a day on R&D as far as artificial intelligence, and then do a meetup once a month and go on an annual, at least one trip a year as far as artificial intelligence, because you'll be so far ahead of the people who are soon to be adopting AI. Anyway, R&D tax credit, it's $1 for dollar tax credit. All right, now let's go into a captive. This is the third tax act. Captive 831B is basically set up an insurance company. The cool thing is well, what happens is when you're writing a check, let's say for insurance to ABC Mutual Company, that's deductible. But what happens to that money? You've lost it, right? At the same time, if you set up a captive, all legal, moral, ethical, you write a check for, let's just say, whatever it is, $10,000. You get to manage that money, in effect, because you're setting up your own insurance company. When you write the check, if people write checks nowadays, wire the money, that's a deduction. When you get the money, you don't have to take it as earnings. It's the way the tax code's written. It's beneficial for the small business owner. Now, it's not driven by taxes. Nothing we say or do is driven by taxes, but it's driven by risk. If you have risk as a small business owner, it makes a lot of sense to do this. It really depends on the application, et cetera, et cetera. But what I would say is at least think about it when it comes to risk mitigation and also taxes. Now, going through this very quickly, these are 3 tax hacks for real estate investors. Now, we have a lot of other things. Believe me, those are the 3 that are kind of the things that we're talking about. Everything we do when we do, audio or video, it's basically based on the premise of people calling in, what's the hot topic of the day. And right now, these are the 3 things that people are asking about that we believe can lower tax liability for an entrepreneur, specifically a real estate investor. Defined benefit plan. Got to at least look at it. Ask your tax advisor, ask your your professional advisor, your financial, whatever the case is, ask them if it makes sense. Number 1. Number 2, very important, very, very important. Captive. A captive is a huge benefit to business owners if they're writing I had a guy who's writing a check for $400,000 going out of his pocket every single year, and now he's putting together a captive. So there's a lot of compliance, et cetera, but he's going to be receiving the money, and we're going to be managing the money for him. But what's going to happen is he doesn't lose that money. He gets the tax deduction, he gets the tax benefits, and it's his money. It's not ABC Insurance Company. Think about that, okay? And then also, finally, as I mentioned, the R&D tax credits. R&D tax credits are at least worth thinking about. Ask your tax advisor. He or she might charge more for that to be reviewed, but in most cases, I would say, especially in today's world, it makes a lot of sense. And by the way, people say, "Oh, I'm afraid I'm gonna get audited." It doesn't increase your risk. It does not increase your risk of audit. At least talk to your professional advisor. If he or she doesn't know anything about it, get a hold of us at vastsolutionsgroup.com. You've stuck with us this long. I want to say thank you very much. Entrepreneur's Manifesto, a collection of smart financial advice. You get this sure that we're adding value, and one way of getting that is if we give bonuses and people email us, etc. Once again, Kenneth French of vastsolutionsgroup.com. It's totally been a pleasure. I love that you guys are taking time to spend with us here.